Here we are on May 24th on Friday, about 3 weeks in finally seeing a correction. This is an important correction, more important than most, because there's two very different scenarios, even still in this dark window scenario that we see is far more likely. The markets still act like and look like they're on crack. They want to go up. They discount bad news and the least good news, and they're just roaring again. And the only reason we're finally correcting after a very strong bounce off of the 24% correction in the NASDAQ into December last year, 3 months it took, and the 19 to 20% correction in the Dow and S&P is we've got big geopolitical tensions. Everybody knows about the trade war with China, but I've been commenting for weeks, and Rodney has too, a long time, longer than that. China has a very different view. We don't understand China. They think long-term their goal is world domination, supplanting the U.S. as the leading economic and military nation ultimately in the world. This is not just to have good trade and grow. Yes, that's in both of our interests and has been, even though China does cheat in a lot of ways and doesn't play fair. And it's right to call them out of it. But every time they look like they're going to make a deal, they suddenly back off. Kind of like Kim Jong-un. Every time he says, oh, yeah, I'll stop my missiles and I'll be a good boy. And then you pause, oh, he's back doing it again. It's the only power this jerk-off has. You think he's going to give it up without getting something major for it? China, again, they're more interested in the long term and will take short-term pain. Trump's got to get reelected next year. Chairman Xi doesn't have to get elected the rest of his life. They're not a democratic process, and they please their people by overbuilding everything, and they're stimulating their economy right now to offset this trade war to keep their people happy and to give them some strength. So we're not surprised China keeps backing off. Now you add to that the tensions in Iran. Some ships, oil ships get tough. 4 ships get attacked and damaged right off of Iran near the Straits of Hormuz. Oh, who likely did that? Well, this is after John Bolton and intelligence claims there's been leaks that Iran is getting more desperate over the sanctions and Trump backing off on the nuclear deal, putting more pressure on them and acting more aggressive from his side. And they may start to get aggressive back. I don't know if this is true or not, but there are tensions. Now, I can tell you, this is not likely to turn into a major conflict, although the tensions like to build. What I'm going to do on Monday in the 5-day forecast is look at these two scenarios and which one is more likely. And thus far, it's leaning towards the shallow correction, scenario 1. But if it goes down more, and it's just started to turn down yesterday on Thursday, if the market keeps going down, it could be looking more like scenario 2. We're measuring this versus the correction, the 3-month, 24% NASDAQ correction late last year. If it's acting like that, then it's scenario 2, and it's likely to go a little lower than that. If it's not, we're going to get a shallower correction by early June, then it's off to the races. So that's important. Very different scenario than going down for 3 months, 24%, and then off to the races to the dark window finale. Scenario 1, it could hit 10,000 by as early as September. Scenario 2, 9,400 more likely by maybe January next year. Same kind of general ending, but 2 different ways of getting there. Scenario 1 favors the investors that are more invested in the market and want to hold in there for this last finality and don't want to sit through much more pain. Scenario 2, the deeper correction allows people that have powder dry on the side to add even more advantageously into this final dark window, the sharpest rally you're likely to see in past years or for a long time. So this is an important time. These geopolitical tensions are important, and they'll resolve or not, and this is part of why the market's uncertain. And again, geopolitics and politics always creates the greatest short-term uncertainty, even though in the long term, none of this stuff affects our long-term forecast. All these wiggles go out, and we keep saying politics and politicians don't drive our economy, except in third world countries where they control everything, like China. The fundamental trends do. So that's what we look at long term, and that's why we only have one scenario, but we have 2 scenarios here. So Early next week, I'm going to also look at why my geopolitical cycle. Now, this is a long-term, like 35-year cycle, 17, 18 years up, 17, 18 years down. Very important cycle. It has been down since late 2001, but it is due to bottom late this year, early next year at the latest. Even though this is a long-term cycle, it would say this is not likely to be the beginning of another big new wave of civil wars and warfare in the Middle East. It's likely to be the crescendo of the chain of terrorism and civil wars we've already seen for the last 17, 18 years since late 2001 and 9/11. That's a very different perspective. And again, I got a lot of questions in my recent tour of Australia and London. People asking, well, if you're right about this big crash, isn't that going to lead to World War III or major wars, to, for governments to dig their way out and just more conflict in a difficult situation? And you know what? In the 1930s, winter season and big correction, 29 to 32, that was just starting a negative geopolitical cycle. And it went all the way through World War II. And that depression was followed by the biggest war in world history. I do not see that. Certainly there'll be all types of impacts geopolitically and some wars and clashes, but I think this Iran thing is more the crescendo and likely to be over by later this year, not accelerate much past maybe the next few weeks or months or something. So that's another perspective I'm gonna look at early next week. But one way or the other, all these factors, and again, add to that, Trump is so backed in a corner with all these investigations, and he wasn't cleared by Mueller when it really comes down to it as fully as he said. He still feels attacked, and he's saying, well, I'm not willing to work with the Democrats on anything until they stop attacking me. Another geopolitical tensions. We got 3 tensions working against the market short term. But again, everything about the market thus far, the past correction did not say the market was over. This correction thus far would have to get far steeper very quickly to start to play out that, the bubble has burst and we're going to see 42% in the next 2 to 3 months. That does not look at all likely here yet. Could be, but it would be obvious to us pretty soon if it did. So these 2 scenarios are really where it comes down to. We're going to continue to monitor this. I'm talking about it now, been talking about it the last few weeks. We're going to talk about it the next few weeks. I think this will be more clear by early June, mid-June at the latest. If it's shallow, it should bottom by then and start to head up and shouldn't go down a lot more. If it's going to be deeper, it should take 3 months. And the correction should be 25 to 30% in the NASDAQ. And then we get really spectacular buying opportunities. So again, this is important. Keep listening. I will keep you updated.